Hi, this is Walter Montero, and you're listening to this week's edition of the Real Estate and Mortgage Show. Hey guys, how you doing? Walter Montero here with the Real Estate and Mortgage Show. Welcome to the show. Today is April the 13th. We're a couple days away from the Easter long weekend, and I want to wish everybody a happy Easter before I start off the show, but just want to reach out to you and talk to you a little bit about what's going on in the marketplace. Obviously, we've had some changes, a little bit of a disruption, shall we call it, to the marketplace. At any rate, I don't know what you want to call it, but there is definitely something that has changed out there. Certainly the fervor of the marketplace has certainly settled down. It's certainly not to that frothy, bubbling situation that we had for, the last few years. You know how most listings have offer dates. They go on the market and they only entertain offers on a certain day. Well, those days are sometimes being met with no offers at all. So it's very interesting what's happening and what sellers are doing to try and get their property sold. Because some of these people that are on the market have actually already bought something and they need to sell. So there's no fooling around. They got to get their property sold, or they have to find some other way of holding on to two properties. So, it's very interesting to see this dynamic. I certainly don't see, a major drop in prices, but I have seen a little bit of a drop. And I've seen conditional offers start to come back too. In fact, we just sold one that was conditional on financing for a few days. So very interesting to see the way things are sort of playing out. And how are you going to tackle this? I would say, the way I look at MLS right now is that the average list price to sale price ratio dropped from 131% to about 125%. So that means that properties are selling for 125% as a medium of their list price. So half of them sell for more, half of them sell for less. I think you really got to lean on your buyer's agent, on your cooperating agent, to give you some guidance on price. The other thing we're seeing is some of those sellers that were, obviously trying that strategy are doing one of two things. They're either lowering their price even more, to try and trigger that multiple offer situation, or they're actually putting their home back on the market the traditional way, where they put it at a price that they want to sell it for, like the old days. So very, very interesting to see these things play out. Not sure where it's going to go, but time will tell. Today was also the day the Bank of Canada increased the bank rate by 0.5%, or what they would refer to as 50 basis points. That's the fancy way of saying half a point. Anyway, I think that's bumping up the prime rate right now. The prime rate right now is at about 2.7% currently, and it's probably going to go, in fact, it's going to go to 3.2%. And then depending on what kind of arrangement you have with your lender in terms of plus or minus prime, that's what you're going to pay. So your payments are going to go up a little bit. Some people are actually converting their mortgages to a fixed rate. I would be very cautious with that. Because the 5-year fixed, that thing's bordering on 4%. So it's a big spread between 3.2 and 4%. So it is significant. You may even want to consider either one of two things, either just ride it out. Variable's the way to go. It's the name of the game. Or you may even want to lock in at a shorter term rate. So maybe a 1 or 2 or maybe even a 3-year where the rates are a little bit lower. All things to consider for sure. Lean on your mortgage professional to guide you through that process. Okay. Now you're starting off. Let's say you're starting off as a home buyer / seller. Up to now, everybody has been giving you the advice that you should buy first before you sell. Because if you don't do it, then you're going to end up homeless. You're going to sell your home and you're going to have nowhere to move to. Now, because of the way the market is changing a bit, we've noticed the increase in inventory. There is a little bit more inventory, but I want you to keep things in perspective. For example, in Cambridge, right now there is about 175 active listings. And when I say active listings, I'm talking about residential, either single family or multifamily. Okay. In a normal real estate market, so before all the craziness happened, we would carry 600 to 700 listings. So it's still very, very low. So you got to be very careful with that approach. So what I want you guys to do is, if you're going to buy first, make sure that your finances are in order. You know exactly what you're going to do. You got a plan A, you got a plan B, you got a plan C. Because if by chance you buy something and you can't close on, or you obviously don't sell your property and you're unable to close, you're going to get yourself in a pile of trouble. So make sure that you got those ducks in a row. Some people talk about bridge financing, and bridge financing is fine. But remember, bridge financing only works if you have a firm sale on your house. If your house is still unsold, you can't bridge. You can do other things. You can get a mortgage on both properties, but then you get into the whole qualification process, and that gets messy. Now, is there alternatives? Yes, you can go private financing, but private financing's not cheap. So keep that in mind when you're tackling buying and selling in today's market. It's a little bit of a wonky market out there, so be very, very careful. Lean on your real estate professionals, your mortgage professionals, to guide you through the process. All right. And then finally, I guess the last thing I want to talk to you about is, where is this market going? Is this market going to tank? Are we in trouble? Are we going to lose, 24% of the market value of the properties? I don't know. I mean, I've seen this sort of play out before. It could very well happen. I have a very serious doubt that will happen. With rates going up, there's no question it's going to make it harder for, call it John Q. Public to buy a home. But remember, there's still not a lot of homes for sale. Canada's letting in 400,000 new Canadians into the country every single year, and a large majority of them don't leave GTA. Okay, and that means even spilling into the Tri-Cities, Cambridge, Kitchener, Waterloo. So remember that. So property values, I'm pretty confident in. What I'm not confident in is the value of our dollar, the way that inflation is eroding our money. I think if you had a choice between, sitting on cash and sitting on real estate, maybe real estate's the better way to go. I mean, your money is sitting in the bank, and it's just losing its buying power. Oil prices certainly aren't helping. The war in Europe is not helping. So who knows? But I'm going to say my gut, my 35-year experience, and, this is on record here, so you guys can call me to the mat in a couple months or 3 months or 6 months and say, hey, you made the wrong call. I'm going to say that we're probably in pretty good shape. I think we're going to flatline here for a bit in terms of values going up or down. I don't think they're going to go down much more, but I think we're going to flatline here. And to be honest with you, I think this little hip check on the rate game, I have a feeling that the bank may even actually end up lowering these rates again later in the year. Who knows? I don't know. I don't have a crystal ball. But anyway, that's my 2 cents. My son, Christian, is in the entertainment business, and I guess they call this kind of stuff riffing. So that's what I'm doing. I'm riffing and giving you a podcast with just giving you a brain dump more than anything else. I hope you enjoyed the show. And if there's anything you ever want to ask me or call me about, call me anytime. 519-240-0360. That is my cell number. Some people think I'm crazy giving my cell number, but I want to help you buy and sell real estate and finance it. And my email is walter@maximumresults.ca.